Good evening. This is Ken Long from Tortoise Capital. I'm going to review the weekend reports for March 24th, 2012. Pardon my throat. We have a bullish normal market conditions. It's over at the high end of normal on an annual basis, in the middle of the 10-day NDX range. 200-day moving average stretch, 11.43% is coded green, bullish. The slope of the 50-day moving average is coded white and bullish. ADX is a very strong 33.6. ATR percentage right on the boundary of normal and quiet at 0.90%. Blended monthly rebalancing stays the same until on or about 1 April, excuse me. And you can see the holdings of the 26 and the 13 ETF portfolio. ETF 2, theoretical exposures at 100%. The model portfolio is at 100%. Review on the portfolios from top to bottom. Strength is in the U.S. with the risk on trade. The Qs, mid caps, small caps, SPY, followed by emerging markets in Brazil. Treasuries at the bottom. It's the only ETF that's on a cash signal. 26 ETF, it's financials, the Qs, emerging markets in Germany and Europe, excuse me. Mid caps, Brazil, Russell 2000, then the S&P spiders. At the bottom are all the Treasury complex and some commodities, agriculture. Market health check. You can see the swing high at 140. Price is right at the 30 period regression line with the 10-day moving average here, and which is better than the 50, which is better than the 200. The 5% sell box is here, that would indicate support at 134, and then 10% sell box, that's interpreted as 0 to 5% would be market noise, 5 to 10% a correction in a bull market. So everything looks long and strong here. You can see it's just come out of overbought conditions on Williams percent R. The jaws of PPO, percent price oscillator, have closed based on this little 6 or 7 day pullback here. Slope, however, of the 30 period regression line is still strong. All 10 indexes in the ETF2 database are on a buy signal, thus we're still at 100% invested, 0% cash. SPY is better than EFA. Inside the U.S., it's tech, mids, smalls, then the large caps. The two strongest sectors in the world market model, the Qs and MDY. Two weakest are Asia less Japan and Japan. World market model, the U.S. is above average. NASDAQ, the large cap growth, doing very well, probably on the strength of Apple. All of Europe is above average. In the countries, it's Germany strong, Spain weak. Most everything else above average. Japan weak, Asia less Japan above average. The winners in Asia among the countries remain the same at Hong Kong, Malaysia, Singapore, Taiwan, South Korea, with weakness in India, Australia, and China. Latin American emerging markets are above average. Only Canada is lagging the Western Hemisphere. Treasuries and corporate bonds are weak. U.S. real estate above average. Gold and silver are weak. Inside the business sectors, it's the risk on trade with materials, finance, industrials, and technology strong. The defensive sectors, healthcare, utilities, and staples weak. Top 30 of the ETF2 database, sorted by the average column. It's still the usual suspects: home builders, retail, biotech, regional banks, U.S. tech, semiconductors. Dow 30, the strongest ones are in the financial sectors with Bank of America, J.P. Morgan. Home Depot, Caterpillar, Disney, and Microsoft rounding out the top 6. The two weakest are Hewlett-Packard and McDonald's, the only two that are on a cash signal. Looks like a good time to be buying cheeseburgers on sale. Just for quick reference, the ETF liquidity report. The 5-year volatility study looking at the 30-day standard deviation of SPY. We are at an extremely quiet location right now. It can remain quiet for a long time, as you've noticed, but the volatility spikes are pretty dramatic when they occur. Shift right ahead to the daily. We'll go straight to the gap stat. 13 times in the last 30 days the market has gapped down. 5 of those 13 the gap down has failed for an additional minus 0.23. 8 times the gap down has reversed to close higher with 0.30%. 17 times the market has gapped up. 6 of those times the gap up has reversed to fail an additional 0.33%. And 11 times that gap up has continued to gain for 0.42%. You can see that we have drifted out of overbought conditions. No signals in channeling an overreaction. You see how quiet volatility has become. ADX getting stronger. 10-day Max Payne, UTX, Alcoa, Caterpillar, Chevron, and Hewlett Packard. Pattern trades, lots of 551s. USO, Japan, blended commodities, mid caps, Euro Asia blend, and the diamonds. 5-day down pattern in UTX, 551W and Johnson & Johnson, triple screens for Microsoft, Verizon, Coke, and Bank of America. See lots of dojis, all the signals, the target-rich environment here. Max Payne range compression is how this is sorted. Those in the auto framer reward to risk ratio are ones that test out better than 2 to 1. Frog quality numbers, quite a few of them highlighted, are better than 3.0. 3% winners from the 3 percentage winners from Friday were Hewlett Packard, Caterpillar, Bank of America. The 2 losers, AT&T and Verizon. ETF 30. Just a couple dojis. You have signals on doji and channeling for utilities, which are also number 3 on Max Payne range compression and have a 3.7 reward to risk ratio. You can see the large stack of 551W candidates. That bodes very well for the market. Regression line still has a high R squared factor, and price is right at the regression line, which is slightly above its 10-period moving average. Has started to hook up in the last couple days after having pulled back from a +1 standard deviation. Percent strength is hovering just under 2 standard deviations above the 180-day average. Frogs, fail stats, signal to noise for your reference. And we're right in the middle of the safe zone channel. And under the Dow 30 qualities, things that are looking good. As a stealth trade, Verizon, Procter & Gamble, Coke, and Pfizer. And for the ETFs, utilities, treasuries, oil, and XLP consumer staples. Pivot points and elder safe zone and the correlations. Keep your powder dry. This is Ken Long of Tortoise Capital with an abbreviated report review. We're getting it done at the live trading workshop, and things are looking good in Raleigh. So take good care and see you in the chat room.